Want my latest market insights? My latest report, Uranium Trend is En Fuego, is now available. Scan this QR code or click on the link in the description. I had mentioned yesterday that we were below the 6,600, very, very nicely supported heavy amount of puts, and sure enough, wouldn't you know it, we were down here, this 65.50 area, and they monetized, which was basically my baseline expectation. We'd go back into that kind of 66.40, which is the gap down. We had the Friday extravaganza, and it would have been perfect for bulls if we had gap down, and then that was a buy, Tuesday higher. But Trump intervened and did his softening of tone, and futures gapped up to 50% of that sell-off. So the one it was a short the rip. Basically, you fade the pop, buy the drop. And that's exactly what happened. Tons of 6,600 SPX puts were in the money when we opened Tuesday morning, and they monetized. And then it just so happens that we closed about 66.40. So also mentioned that this can still get a little wild and woolly, meaning we do have strong gamma support at 66.50. It's bullish above. That's obviously where we're playing right now this morning, which is Wednesday, in this playground. And if this pattern fashions to be a head and shoulders, then you know it's going to roll over again, or we'll get a little bit of sideways through earnings, which also is par for the course. Earnings typically, not just this options expiration on Friday, but earnings season typically is more focused on expectations. They were way too low for Q2 and companies crushed it. So on aggregate, the expectation was 4%. That's a joke. It was 11%. Now we got a little bit of a higher bar, and it's more likely they're going to disappoint and their earnings will get ratcheted lower. So that's the game Wall Street plays. The point is, for this chart alone, coming up here into that 6,700, which is obviously above positive gamma at that 6,500, we now hit the call wall. So we get the put wall that really supported at 6,600 and they monetized. Now we've got 67.05 and we're just kind of doing a ping pong in there. So lots of day traders now. And then of course, chasing anything that moves related to the meme world, it seems, of quantum and AI and rare earths and critical metals and mining and all that other stuff. We also have ASML that reported this morning, and they reported better than expected earnings, and that is popping higher, as is China. Basically, long story short, above 66.50 means bullish, but below is not. And I wouldn't be surprised if we retest some of this level at the end of the week. So more towards the Friday timeframe. And this is also where we have a situation where I mentioned on Monday that Jason said he can see 67.35 hitting. 67.35 is way the heck up here. So again, if we're in this neck of the woods, it wouldn't be surprising that we hit and then start a little bit more bearish into that chop through earnings season. And the rest of this is focused on the fact that we've had this massive oversold stuff got bid. So again, I know the memes are going around about RGTI. It's now a $5 billion valuation in 5 years with zero revenues, and they've done 5 capital raises. It's funny, but it's the future that's being brought forward, and that's what we're playing right now. But even the hedge fund factor rotation, which I've called out a few times, is basically they're lightening up on some of their VIP trades, and they're covering short these protracted downtrends in batteries and solar, whatever is descending trend lines. You can see them. They're going down, down, down. And then all of a sudden, boom, US government as a venture capitalist is bringing this stuff basically up off the ground, and it's sticking for now into the end of the month. And then let's see if they stick around. So they're going to put their profits on the table before year end, and then they very well could go back to pummeling these plays toward the end of the year as we do the Santa rally. What's the Santa rally? It's not the broadening out, it's the concentration risk in the Mag 7. So let's see what happens. We've got to get through the week, but I just wanted to identify some of this very, very big mean reversion that's going on with the FANG stocks petering out and the small caps broadening out, but it's not really broadening. In other words, you still have a situation where the squeeze that is related to small caps is in the most shorted, high beta, non-profitable plays. That's not broadening out. And the profitability of those plays, same thing for September. The very large stocks in the Russell 1000 gained an average of 8% in September. This has been going on for a few weeks, right? right? Where the other 991 stocks only gained 0.1%. That's not broadening out. That's still concentration risk. You get one or the other. And in lieu of this sector rotation, where you go from basically growth to value, value to growth, or high beta to low back to high, in lieu of that, then you will get volatility. So these are still kind of the mile markers that I'm using to keep an eye on. Higher US dollar, falling dollar yen. That was last Monday and it's working. I'm waiting for round 2. Rising bonds right now and falling Mag 7. That's happening. It's slowly. Metals squeeze, margin calls, which creates that FX and equity volatility. It's calm for now. That silver backwardation that triggered on Thursday, Friday of last week. The growth value ratio is below 2.3, but not decisively. And then, of course, credit spreads are starting to widen. And I've warned already, consumer lending sector is in trouble. That was a post a few weeks ago. The quality of that credit is deteriorating despite the tight spreads. And now they're starting to widen with volatility. So Jason had some really great warnings also. If we get some continuation to the downside, and again, that is my expectation at the end of the week, but then we could see a little bit more of drama. And remember the 10-week EMA? That's what I would expect to get tagged for both the Qs and SPY. So then we have to watch, because during earnings season, they usually keep everything stuck together with no big breakouts or breakdowns in the top line markets. But we have a very different situation now, and I identify here what Goldman has and more on the rest for CTA crowd. And if we start to sell, they will start to sell, and they don't care about the future forward earnings of RGTI. So keep that in mind. Has not triggered yet, but it will if we get another metal squeeze. This is some reminders of how elevated the gold and silver paper markets have gotten, and to be careful. And then talking with Client Edge Jose last night, very much the same. Risk reward asymmetry of long precious metals is gone. So take care out there. I don't think debasement trade is over. Balancing trade is dollar bearish. This is from, goodness, March. Anyway, it's still in play. I would really like to warn before I do my intermarket. Goldman just put out a note on silver, okay, on SLV specifically. And it's a long note. I already referenced the tightness and, of course, all the macro and fundamental reasons for why SLV and such are moving higher. But they gave a word that is very interesting, right? This speculative demand for asymmetric upside was significant. And what did I just put yesterday after talking with client Jose? He said the risk reward asymmetry is gone. And he was taking that off my comments yesterday when I was talking about this. Goldman literally just put out this morning, and I'm just seeing it now, that the recent 5-day implied volatility jump registered as one of the largest in the past 3 years, and the current level of implied volatility plus its spread to realized registered multi-year highs. As a result, a slowdown in the pace of price gains and or reversal could cause quick profit taking. Bingo. It's exactly right. So in other words, this IV is ramp. So much of the gains are also in this acceleration of this IV ramp. And now, really, once we hit the prior 2011 highs, do not be surprised if that whole thing slows down. And then as the IV is decaying, those long SLV start to take profits. It's one of the reasons why I get bearish into an options expiration on a Friday and right after, because that IV just implodes. And it's also why you have earnings crush. When you get that excitement and then you get the results of an earnings play, what happens to the IV in your options? They just disintegrate. So you play that IV crush. That's what Archana does a lot of times with her earnings plays. Michael too. I'm not really an IV crush girl, but I respect that is when it peters out. I like adding time because I want to avoid the IV crush. But the point is, everyone's a different trader. Silver is getting into that point of play where even Goldman is highlighting, as a result, quote, a slowdown in the pace of price gains and or reversal could cause quick profit taking. That's it. I think that's where we're going to hit very, very soon.
Join Club today to engage with Samantha and her team of 10 experts. Scan this QR code or click the link in the description. Subscribe to LaDuc Trading YouTube channel for more live trading room recap videos and other content.